Trading is like buying and selling stuff, but instead of clothes or groceries, you're dealing with things called assets. These assets can be anything from stocks, which represent tiny pieces of big companies, to currencies like the rand or the dollar. Essentially, you're buying low and selling high, hoping to make a profit in the process. Stocks are like tiny pieces of big companies. When you buy a stock, you're essentially buying a small part of that company. If the company does well, the value of your stock goes up and you can sell it for a profit. But if the company doesn't do well, the value of your stock can go down and you might lose money. Currencies, on the other hand, are the money used in different countries. You can trade currencies just like you trade stocks. For example, you might buy US dollars when they are cheap and sell them when their value goes up. This is known as forex trading. The basic idea is to buy low and sell high. This means you purchase an asset when its price is low and sell it when the price goes up, making a profit from the difference. It's similar to buying sneakers on sale and reselling them later for more money. Think of it like buying sneakers on sale and reselling them later for more money. You spot a good deal, make the purchase, and then wait for the right time to sell them at a higher price. That's trading in a nutshell. It's about spotting opportunities and making smart moves to grow your money. But it's not always that simple. It's about spotting opportunities and making smart moves to grow your money. Successful traders spend a lot of time researching and analyzing the markets to make informed decisions. But remember, just like with sneakers, not all trades are winners. Sometimes, despite your best efforts, the value of your assets can go down, and you might lose money. This is why it's crucial to manage your risks and not invest more than you can afford to lose. Sometimes the value of your assets can go down, and you might lose money. This is a part of trading that every trader must accept. The market can be unpredictable, and even the most experienced traders face losses. That's why it's important to learn the ropes before you jump in head first. Educate yourself about the markets, understand the risks involved, and develop a solid trading strategy. Many successful traders spend years honing their skills and knowledge. Trading can be exciting and potentially profitable, but it also comes with risks. It's not a get-rich-quick scheme. It requires patience, discipline, and a willingness to learn from your mistakes. It's not a get-rich-quick scheme. It takes time, effort, and a good understanding of the markets to succeed. You need to be prepared for the ups and downs and stay committed to your trading plan. It takes time, effort, and a good understanding of the markets to succeed. So, if you're thinking about getting into trading, make sure you're ready to put in the work and stay dedicated to your goals. Before you start trading, you need some skills. These skills are not just about understanding the market, but also about understanding yourself and how you react to different situations. Don't worry, you don't need to be a math whiz or a Wall Street guru. What you do need is a willingness to learn and the dedication to apply what you learn consistently. First, you need to be good with numbers. This doesn't mean you need to solve complex equations, but you should be comfortable with basic arithmetic and percentages. You'll be dealing with prices, percentages, and profits, so basic math skills are a must. Understanding these numbers will help you make better trading decisions and manage your risks effectively. Second, you need to be patient. Patience is crucial because the market doesn't always move in your favor immediately. Trading is not about getting rich overnight. It's about making consistent, well-thought-out decisions over time. It takes time to learn, analyze the markets, and make informed decisions. Rushing into trades without proper analysis can lead to significant losses. Third, you need to be disciplined. Discipline helps you stick to your trading plan and avoid making impulsive decisions based on emotions. It's easy to get emotional when trading, especially when you see your money going up and down. Emotions can cloud your judgment and lead to poor decisions. But it's important to stick to your plan and not make impulsive decisions. A well-thought-out plan can help you stay focused and achieve your trading goals. Finally, you need to be a good learner. The financial markets are dynamic and ever-changing. The markets are constantly changing, so you need to be willing to adapt and keep learning new things. Staying updated with the latest market trends and news can give you an edge. These skills will help you navigate the exciting world of trading and increase your chances of success. Remember, practice makes perfect. The more you practice, the better you'll become at making informed trading decisions. Let's explore. The trading world is like a massive supermarket with aisles upon aisles of different products. You've got stocks, which are like owning a tiny piece of a company. Then there's Forex, where you buy and sell currencies hoping they go up or down against each other. It's like betting on the Springboks against the All Blacks. Commodities are another option. Think gold, oil, or even corn. These are raw materials, and their prices fluctuate based on supply and demand. You can trade them too. And let's not forget about indices. These are like baskets of different stocks grouped together. Instead of buying individual companies, you buy into an entire sector, or even the whole market. With so many options, there's something for everyone in the trading world. But remember, each asset class has its own quirks and risks. Do your homework before you start buying and selling. Trading without knowledge is like driving with your eyes closed. You need to do your research. Luckily, in this day and age, information is everywhere. You can find tons of free resources online, from articles and blogs to videos and webinars. There are also paid courses and mentorships if you want more in-depth knowledge. Don't be afraid to ask questions. Join online forums, connect with other traders, and learn from their experiences. Remember, the learning never stops in the trading world. The more you know, the better equipped you'll be to make informed decisions and navigate the market successfully. Knowledge is your best weapon in the trading game. Section 5. Baby steps, practical tips for beginners. Alright, ready to dip your toes into the trading pool? Start slow and steady. Just like learning to swim, you wouldn't jump into the deep end without first getting comfortable in the shallow waters. Trading is no different. It's essential to start with small, manageable steps to build your confidence and understanding. Don't go chucking all your savings into the market on day one. Remember our sneaker analogy? Think of your initial investments as a way to test the waters. You wouldn't buy 1,000 pairs hoping to resell them all, right? Instead, you'd start with a few pairs to see how the market responds. You wouldn't buy 1,000 pairs hoping to resell them all, right? The same principle applies to trading. Diversify your investments and avoid putting all your eggs in one basket. This way you can minimize risks and learn from each trade. Open a demo account first. This is a fantastic way to get a feel for the trading environment without any financial risk. It's like a practice field where you can trade with fake money, allowing you to understand the mechanics of trading platforms and market movements. It's like a practice field where you can trade with fake money. Use this opportunity to experiment with different strategies and see how they play out. The more you practice, the more confident you'll become in making real trades. This way, you can get comfortable with the platform, test different strategies, and see how it all works without risking a single rand. Analyze your trades, understand what worked and what didn't, and refine your approach accordingly. Once you're feeling confident, start small with real money. Begin with a modest amount that you can afford to lose. This will help you manage your emotions and make rational decisions without the pressure of significant financial loss. Pick one or two assets you understand, and trade with a tiny amount that you're comfortable losing. Focus on learning the ropes and gaining experience rather than making quick profits. This approach will set a solid foundation for your trading journey. Remember, it's all about learning and gaining experience in the beginning. Don't get greedy. Take the time to educate yourself, read financial books, and stay updated with market trends. Knowledge is your most valuable asset in trading. Set realistic profit targets and know when to walk away, whether you're winning or losing. It's crucial to have a plan and stick to it. Avoid the temptation to chase losses or get carried away by winning streaks. Remember, Rome wasn't built in a day, and neither are successful traders. Patience and persistence are key. Keep learning, keep practicing, and over time, you'll see your efforts pay off. Trading is a marathon, not a sprint. Section 6. Real-world trading examples to learn from. Let's say you love your smartphone and the company that makes it is doing really well. Their profits are up, they're launching new products, and everyone's talking about them. That could be a sign to buy some of their stock. If the company continues to grow, the value of your stock could go up too, and you'd make a profit when you sell it. Or perhaps you think the rand is going to strengthen against the US dollar. Maybe tourism is booming or the price of gold, a major export for South Africa, is skyrocketing. You could buy rand and sell US dollars hoping to profit from the exchange rate movement. Remember, these are just basic examples. Real-world trading involves much more research and analysis. But you get the gist. Identify potential opportunities, assess the risks, and make your move. Section 7. Risks and rewards. Understanding both sides. Trading, my friends, is a bit like a roller coaster ride. It has its ups and downs, its thrills and spills. You can make some serious cash, but you can also lose some. That's the name of the game. Before you even think about buying or selling anything, understand the risks involved. The market can be volatile, meaning prices can swing wildly in either direction. News events, economic data, even a tweet from a certain someone can send the market into a frenzy. Don't let the fear of loss paralyze you though. Trading is all about managing risk. Set stop-loss orders to limit your potential losses and take profits when you're happy with your gains. Remember, it's better to walk away with a small profit than a big loss. Section 8. Keep learning, keep growing. The learning never stops in the trading world. It's like a constantly evolving beast with new trends emerging all the time. Stay ahead of the curve by reading books, watching videos, attending webinars, and following market analysts. Don't be afraid to experiment with different trading strategies and find what works best for you. Some traders swear by technical analysis, using charts and indicators to predict future price movements. Others prefer fundamental analysis, digging into company financials and economic data. The key is to find your own trading style and constantly adapt to the ever-changing market conditions. Remember, the more you learn, the better equipped you'll be to navigate the exciting world of trading. Section 9. Ready to trade? Let's go. So, you've learned about trading, the skills needed, the different assets, the importance of research, and even got some practical tips. Now what? It's time to take the leap. Remember, starting small is key. Don't go all in at once. Dip your toes in, test the waters, and see how it feels. Trading can be an exciting and potentially profitable endeavor, but it's not for the faint of heart. It requires patience, discipline, and a willingness to learn and adapt. But with the right mindset and a solid understanding of the market, you can navigate the ups and downs and potentially achieve your financial goals. So what are you waiting for? The world of trading awaits. Remember, fortune favors the bold and the informed.